How's it going, everybody? This is Mike here with InvestTheory.com. Wanted to give some information on Heikin Ashi candlesticks, a little bit more in-depth view of what the Heikin Ashi trading patterns are, and just an overview of really what they are. So let's go ahead and start. So the Heikin Ashi candlestick, as I've explained in a previous video, is a momentum-based candle, and it looks extremely similar to the standard Japanese candlestick pattern. However, instead of just tracking the price action, it also tracks the momentum in the stock as well. Now, a normal candlestick consists of a high, close, open, and low. The Heikin Ashi candle is a little bit more complicated. So let's break that down. The close of a Heikin Ashi candle, it's the average of the open, close, high, and low of the previous candle. The open of the Heikin Ashi candle is the average of the open of the previous bar plus the close of the previous bar. This is also the midpoint of the previous candle. Now, the highs and the lows of the Heikin Ashi candle is just the highest value and the lowest value of the candlestick, very much like the standard Japanese candle. Here we have what the Japanese candles look like and what the Heikin Ashi candles look like. This is the exact same stock, the exact same image, but you notice there are a few differences. For one, we have the pattern of the Heikin Ashi candles flowing a little bit more naturally. There's no gaps in the prices. The colors are a little bit more smoother too. They don't fluctuate from green, red, green, red, green, red. Instead, it's tracking the momentum of the feel in the price. So if it's a bullish period, we see a lot of green. If it's a bearish period, we see a lot of red. Now, this chart is exactly the same. You'll notice that the price is different though. And this is because the price of the Heikin Ashi candle will not show the actual true price because it is the average of the previous candles. So a lot of people have been asking me, why would I want to trade the Heikin Ashi candlestick? So as I mentioned, it tracks the momentum in the price. Now, the Japanese candlestick, it tracks solely the price action, which is good to know and it's good to have, but the momentum is very important if you're day trading or trading trends. So the Heikin Ashi is easier to identify trends and reversals in short-term price action. Now this combined with a momentum-based indicator like MFI or DMI, it's perfect. You also have smoother charts with no gaps, which is great because you can always see where the momentum is at. Now, you can still use typical chart patterns like head and shoulders. You can even use candlestick patterns like the shooting star, the doji, things like that. Here's an example of what bullish candles on a Heikin Ashi chart looks like. Now, you will notice that all of the green candles in this image have their wicks, or what's also referred to as shadows, at the top of the candle. The opposite for bearish candles, you see that the shadow is at the bottom. Now here is what a reversal looks like. When you have wicks or shadows on both the top and the bottom, it's an indication that a reversal could be imminent. Now, it doesn't guarantee that a reversal is going to happen. Here is a random chart that I selected for this image, and you can see there are multiple places where the confirmation has been confirmed. There is a reversal, and there are some fake outs as well. So be cautious when trading those. Now, when you're using the MFI when trading the Heikin Ashi candlesticks, you want to look at the 1 minute, the 5 minute, and the 15-minute time frames. Combine this with the MFI and look for very oversold conditions where the MFI is under 20. I've highlighted right here where the MFI is under 20. Now you want to wait for a green candle close before taking a position. If you want to be extra safe, you can wait for that second green candle, and that is basically confirming that the trend is changing. Now just know if you're looking at a 15-minute chart and the trend is changing there, the 5-minute chart is going to look considerably different. When you're using DMI, Again, you want to use the 1 minute, the 5 minute, and the 15-minute time frames. You're going to want to look for a reversal candle with an accompanying plus or minus DI line below 10. So when we're looking at this right here, the blue line is the plus DI line. When that line is below 10, you're going to see a potential reversal that's bullish that's going to happen. Now the orange line is the minus DI line. When this gets below 10, we're getting ready for a bearish reversal pattern to occur. I personally really love the MFI strategy. I trade it all the time. I've been trading it for years, but DMI has been proving itself when using it with the Heikin Ashi candles. Keep that in mind. So here's another example of the DMI strategy up top and the MFI strategy at the bottom. So as you can see, here's just some examples of when we would buy a put and when we would sell that put. And then when we look at the MFI strategy, this is our confirmation candle, the reversal, when we buy that call and when we sell the call. Now, for you guys, you know that I play my plays a lot safer than the average individual. So I usually will take profits at 5 to 10%. Now, looking at this chart, you're going to see that these profits probably would have blown 5-10% out of the water. I like to stick true to the chart though. If you're not going to find, if you don't have a very specific percentage that you want to get out and you're solely playing the chart pattern, then make sure you play it. When you get up there to the top and you see that, boom, the MFI has broken 80, you can see it still went on and it went beyond what it was when it hit that 80 marker. But that's a good exit. And that's a lot of really good gains too if you look over to the right hand side and you see the difference in price. Now the DI's lines, these are a little bit different. You can trade these as they go up, but as soon as, if you're trading a put per se, as soon as that blue line crosses back over and it gets below 10, that's when you're going to want to sell. So you're not necessarily trading the orange line again, you're going to want to change the blue line. And again, these are my colors, so your colors are going to be different. So just find what your DI line is, your negative and your positive, and then look at those together. So before I close this out, there are some things to know. So again, a reversal candle does not necessarily mean that a reversal is occurring. I want you guys to protect yourselves by combining other indicators or oscillators. You'll find though that DMI and MFI are both momentum-based indicators. So if you're using them together, you're going to see signals that are the same. This can be really good. It's really it's pretty rare when the MFI is setting up the same as a DMI, but we've noticed that when this occurs, there is a really short-term period where you can play a very quick day trade, and some of you guys experienced that with me when I day traded Microsoft and got in and out in about 5 minutes. Now, the current price shown by Heikin Ashi is not the true price of the stock. Remember, it's the average of the previous candle. So you're going to look, if you're tracking multiple systems here and you've got one charting up that's Heikin Ashi and one that's not, the prices are going to be off. Also, remember that the Heikin Ashi candle is going to change everything on your chart, including other technical indicators, your MFI, your DMI, your Bollinger Bands, your Keltner channels, whatever it is, it's going to be different if you're looking at a standard Japanese candlestick. Now, the last piece of advice is nothing is certain, right? Make sure you're doing your due diligence to protect yourself. Research as much as you can about the stock that you're going to buy and perform other technical analysis on it. Don't just take Heikin Ashi or these strategies as law, because that is not going to be the case. Thank you guys for watching this video. Again, this is Mike with investtheory.com. If you haven't already, go to the website, join our free Discord chat room, and join the community. All right, guys, take care. Have a great day.